Well, with Apple stock down over 10% on the year and news of Vision Pro shipments being cut in half due to the lack of demand, many on Wall Street wondering and they are keeping an especially close eye on the company before their earnings call this Thursday. To help us preview everything that is up in the air, almost as up in the air as me cutting off part of that intro here, Josh Lipton standing by with much more on what investors need to watch here. Josh, what are you keeping an eye on?
So, Brad, we know it has not been easy for Apple investors. So far this year, as you mentioned, that stock is down more than 10%, pressured by concerns about the company's AI strategy, the China business, and of course, regulatory scrutiny. When Apple reports on Thursday, the street's going to be looking for Q2 EPS of $1.50 on revenue of $90.3 billion. But what will be top of mind for investors in that report? Well, Ben Beharin of Creative Strategies says he is first and foremost focused on Apple's bread and butter, the iPhone. And analysts aren't expecting much, forecasting iPhone revenue of $45.7 billion. That would be down nearly 11% year over year. Beharin says that is due to a mix of factors, including tougher comparisons and, importantly, a shaky Chinese economy. The key is going to be, of course, what Apple says about the outlook for the iPhone business looking ahead. I also caught up with Gene Munster over at Deepwater Asset Management. Now, he is focused on AI. Munster does not expect CEO Tim Cook to say much on that topic. Instead, if he's asked, deferring questions to the company's big software show coming up in June. But Munster does believe Apple is going to outline how much they are spending to build out their AI infrastructure. Not specific numbers, perhaps, but emphasizing that they are going to be spending meaningfully more to better compete in this red-hot area. Now, Munster argues that more AI investment, the better. Will investors agree? We're going to find out. Also in focus, Apple's greater China business. Munster thinks revenue in that segment is going to be down 13% year over year. That would be in line with what was reported, remember, for the December quarter. Munster arguing that would actually be a positive, as it would imply business isn't getting worse over there. And he bets the China business returns to growth later in the year on easier comparisons in the quarters ahead. And one more thing. Remember, this is the quarter when Apple typically does update its capital return program. Analysts expect Apple could expand that program by $90 billion. Brad, back to you.
Josh, love a good that one more thing reference there. Of course, what everybody sits on the edge of their ergonomic chairs for when we get the updates and product updates from Apple later on in the year. Josh Lipton, thanks so much.